Aloha, good morning. This is Caron Davis of Caron Realty International, and welcome, Duncan, once again. Aloha, and as you know, if anyone watches our show every Friday or when you have a moment, Duncan is the broker, owner, and president of Infinite Financial Services, and I just I have Duncan involved in all my clients who are looking for some kind of financing or ideas. He's very giving with his time. He will consult with clients even when there's not a necessity for doing a loan, but to guide them in the right direction. So thank you, for all the service that you provide for my clients, Duncan.
Thanks, Caron. Hi,
And
everybody.
yeah, and I thought it'd be great to have you on today with all the changes going on, in our, economy in the US, worldwide, what the finance markets are doing, and also how that'll affect interest rates and maybe some of the loan programs available if you want to free up some of your equity, because there's tremendous equity in property that people have. So I thought this would be quite informative. And Duncan, I'll let you go ahead and give us some good information, which you always do.
Happy to. Yeah, one of the biggest things in the news recently have been the tariffs that have been implemented. Currently, the 25% tariffs that were announced against Canada and Mexico against the products coming from those countries, and then 20% from China, and reciprocal tariffs going into effect next month in April. So there's a large number, a large amounts of tariffs being proposed and already implemented in some portion. And what's happened is before the election, or actually before the inauguration, we saw interest rates go up. So interest rates, even though the Fed cut short-term rates last fall, the long-term rates are driven by the market and what the market expects and what the market expects for the government and for inflation. And so long-term rates actually went up in anticipation of a stronger economy with the election and the change of administration. And people were thinking that the economy is going to grow more, stock market hit record highs. People were expecting all guns to be blazing and the economy to be growing. The tariffs were announced, DOGE was implemented with government cutbacks, deportations were announced. All of those serve to actually slow down the economy. Even though longer term, some of those might be good to make the government more efficient, to reduce the budget deficit. In the short term, when you have fewer people working, you have the layoffs, you have higher unemployment. A lot of the employment, the payrolls, the jobs that were added the last couple of years have come from government jobs. So if the government has a freeze on hiring and they're actually laying people off, we're going to see weakness in the job reports coming up. There's one and there's one every month that will show the unemployment rate trending higher. It has been trending higher for a little while now. And if these policies are all implemented, then we're going to see the results of them with the economy weakening and payrolls and in the GDP. There are already some measures showing some weakness in the economy very recently. And so there's a much higher risk of recession now because of those changes and proposed changes to the government policies. So tariffs, for example, a lot of people were fearing that tariffs would increase inflation. So inflation expectations hit a multi-year high recently. And my view is that tariffs won't have a sustained increase in overall inflation. Some prices will go up of goods from those countries and in certain sectors. But as those prices go up, if the money supply isn't increased sufficiently, then spending in other areas are going to go down, and spending in those areas will go down as well. So overall, you're going to see a slowdown in the economy, and that will decrease and have a deflationary or disinflationary effect. So you won't see inflation overall go up. And even if everything stayed the same and you have increase in prices and with a tariff, that means that it's a one-time change in the price because of those tariffs. But a year from now or 2 years from now, inflation is the rate of change in prices. So the longer term inflation will actually go down, because if you have a tariff implemented now, and let's say later in this administration or in future administrations, they remove those tariffs, prices will actually go down. So that actually has a decreasing impact on the long-term inflation expectations, or it should, and has a also decreases the inflation expectations because of the growth in the economy will be slowed by these policies. So I think contrary to what a lot of Wall Street was thinking, a lot of investors were thinking when the market was reaching all-time highs and the administration was starting out, I was saying that we're not going to see rates go a lot higher. They're actually going to trend lower, and they have been trending lower, and they will continue to trend lower, although not in a straight line. They'll be going up and down. So I think we'll see rates come down, and as rates come down, I think we'll see more buyers come into the housing market. Prices may stay strong. We may see, I mean, we have an inventory problem. We don't have enough homes. And especially here in Hawaii, we don't have enough homes. We don't have enough land. But nationwide, there's an inventory shortage. And home builders, it's a lot harder to build homes here because we don't have enough land. But nationwide, home builders with the tariffs, their costs are going way up on goods and materials. And labor too, if a lot of the laborers are deported. So the costs for building homes go up. And so home builders are not going to want to build as many homes as they otherwise would. So if we have fewer new home starts and less home building, then the supply is going to be constrained, and we still have the demand. We have record numbers of people in the generations that want to own homes, with millennials reaching home buying age, and you have the baby boomers still wanting to own their homes. So just a simple supply and demand equation, we have more demand than we have of supply. There's not enough supply to satisfy the new home household formations. And so we don't have enough, we don't have a good supply demand imbalance. Here in Oahu, I know we just hit another record high on single family homes. And there's just not enough inventory for people to be able to buy the homes that they want to get. So we'll see home prices stay strong. We'll see rates come down. We'll see inflation come down. We may see a recession sooner than we had thought before if these policies remain in place. But I also think there's a chance that as the courts and legislation, the Congress gets involved, they may pull back some on the tariffs and some of the other policies. I know there's some challenges to the tariffs and the government cutbacks. So we'll see what happens. But I think where we are now, if the government, if the executive branch gets what they want, what they proposed, then it'll be really bad for the economy in the short term. And I think that's going to probably be scaled back because they'll see the results. They're already seeing the stock market sell off recently. So I think we'll see less implemented than planned. So overall in the economy, I think it'll be a little weaker than we had expected, with the potential for a recession if those policies get implemented. And we'll see home prices remaining strong and rates continuing to trend lower. As far as loan programs, as far as loan programs, one thing that we've seen, I've actually got a couple of deals that we just closed, and another one where we have leasehold properties where the fee is available for purchase. So some people don't know, but when you buy a property that's leasehold, and if the fee is available for purchase, we can do a combination of the leasehold purchase and the fee purchase at the same time, close simultaneously, and then lenders treat that as a fee simple purchase. So otherwise, it's really hard to finance leasehold properties. So I've had two closed recently, and one we're just starting now, where they're able to buy the fee and buy the leasehold property and not have to worry about all the restrictions that lenders have on leasehold properties, because it'll actually become a fee simple property by doing that combination. Another thing that we're seeing quite a bit is we have a lot of people that have a lot of equity in their homes. We have record amounts of equity in people in their homes as prices have gone up, and sellers have held on to their homes and started and continue to pay off their mortgage over time. We're seeing record amounts of home equity. So it's a good time. There's a lot of people that have equity that's not tapped, and it's a good time to use a HELOC to access that equity, either for another home purchase. There are some people that, for example, they want to assume a VA loan, and in order to do that, you have to come up with a big chunk of cash to fill the gap. One way to do that is if they have another property, they can do a 5-day HELOC. We have a HELOC program called the 5-day HELOC that's all automated. It's much faster than a normal HELOC, because normal HELOCs can take a lot of paperwork, a lot of time. It can take a couple of months to close or even longer, and rates are much higher than they used to be. The 5-day HELOC, it doesn't have the best rates, but it does have a very fast closing. I did one personally myself for one of my investments properties last year, and I got funds in 3 days on an investment property where we didn't have the 3-day rescission required. Everything is done with AI, and we know some tips and techniques to allow someone to qualify for that loan where they wouldn't qualify for a traditional HELOC. So it can come in very handy for certain situations and allow people to access their equity using methods that they would otherwise not able to do. And the approval process is all done online using AI. So I started the process, and within an hour, I had my final approval. I signed with the online notary over my phone the next morning, and then I just waited for the ACH transfer, and I had my funds within 3 days. So it's a really fast process, and it can come in really handy. We actually have a webinar on that product this afternoon, and I'll send you the link for that.
Right. Yes.
The 5-day HELOC. Another thing that we've seen is a lot of the condos, at least in Hawaii, have insufficient master hurricane insurance. And so a lot of lenders are unable to lend on those properties because Fannie Mae and Freddie Mac require 100% hurricane coverage in the master policy. And almost half of the properties, the condos in Hawaii, did not have 100% coverage. A lot of them are getting it more recently because of the law actually requires them to have that 100% coverage, but there's still a lot that don't have it. And there's talk about legislation to kind of relieve that problem because the rates have gone way up with all the recent catastrophes. So as a result, we're seeing a lot of people that can't get financing because their condos don't have 100% master insurance coverage. We have lenders that can finance those buildings. Usually we have to use a non-QM loan, which has a higher rate and a higher down payment required than normally you would on a conventional loan. But you can get the financing, and then once they do get the 100% coverage, then you could refinance to a conventional loan. So we've been doing a lot of those loans as well, just helping people to qualify on condos that they otherwise wouldn't be able to qualify for. We also have had a number of loans recently where we had borrowers that didn't have enough income, a normal traditional qualifying income to qualify. They talked to their lenders, and their lenders said, no, we can't do the loan, come to us. And we're able to create income streams, depending on if they have enough assets, we're able to use the assets to creatively, using the guidelines of Fannie Mae and Freddie Mac, create income streams that will allow them to qualify for a conventional loan. And so we were able to close a lot of loans that other lenders can't because of that. We do have a lot of people that do have assets or can get assets, liquid assets, by doing a 5-day HELOC. So we've actually had people, for example, sell a property and use the equity from that property, use a portion of that to create an income stream and get enough income to qualify, whereas the other lender they went to wouldn't allow them to qualify. The other lenders are not thinking outside the box and ways to make it work. So those are some of the ways we're able to help people. One other that has come up on co-ops. A lot of lenders will not lend on co-ops, and we have lenders that do lend on co-ops. It's a little bit different, but we do have lenders that will lend on co-ops too. So there's a lot of different types of loans that a lot of lenders can't do, and we have dozens of different lenders, and borrowers can do one application, one credit pull, and we can access close to 50 different lenders and just match up the lender for the loan program to the different scenarios that the customers have. So it's something that us as mortgage brokers, and just to clarify, the customers don't have to pay us. The lenders pay us to originate the loans, and it's the same cost if they go directly to the lender versus if they come to us. So you get the better service because we'll work on weekends and nights versus regular bank hours if you just go to a local bank. And you can go to the same bank and we can give you the same products from the same bank at the same rate, but you get much better service, and you get to compare with a lot of different lenders as well to see if something else makes more sense.
And I know, because, I had a gentleman a few weeks ago, and, it was a co-op building, and he was told, he was going to go to a retirement home, and basically said, well, I need to be able to pull some cash, and everyone's telling me I can't get a loan on a co-op. Well, that's not true. So it's really finding the right people, to work with what your personal situation is.
Right.
And that's why
Yeah.
I'm so thankful to have you, Duncan, in my team, because you go look for it if you don't know. I mean, the days
Yeah.
of just doing a black and white mortgage are gone. It's more like financial planning in the mortgage world, right? Really
Right. Right.
looking at
And
somebody's full picture and then figuring out what's the best solution for what they want to achieve.
yeah, and too many loan officers, too many lenders, they'll just look at your documents and they'll say, okay, this is what you qualify for. If you don't
Yeah.
fit into this box, too bad, we can't do anything. We also have loan programs where that don't require any documented income. There's a no income documentation loan. It does have a higher rate,
Yeah.
but even on a primary residence, you can get a no income
Yeah.
doc loan. As long as you put at least 20% down, have good credit, you can get a no income doc loan, and that's on a primary residence. And we do them all the time on investment properties too, because they use the rental income for qualifying. So there's all kinds of different ways to qualify, even with zero down. We have several zero down programs. If someone qualifies, strong income, strong credit,
Yeah.
strong, but don't have enough assets or enough down payment, and so they can buy with zero down. So there's a lot of different ways we can make things work for people that otherwise, if they just go to their bank and try to get a loan, the bank will say no. But we have different options to make those deals work.
Well, thank you so much. We could talk forever, and we'll have to have
Definitely.
episode 2 of this because I'm thinking of all these tests. I have a few questions of other clients that I'll speak to you later on today about it. But just moving on to Mary Ann's photos, like we always loved sharing Hawaii and clouds over a sandy beach, which is always beautiful, and here over Waikiki and creating, over the Rainbow State, and then clouds create drama over the Windward Coast. It's very dramatic sometimes, these clouds. And of course, it creates colorful sunsets, which is fantastic, all the different shades of, as you can see here, purples and pinks. But again, thank you, Duncan, for joining us. And it's just fascinating, the finance world and all the different ways you can look at financing a property or getting your finances in order where they need to be for your next adventure in life. So, feel
Yep.
free to reach out to Duncan or myself. If you've got a question on something or your current situation, or you want to pull equity out of your property, or, you might have, your children looking to buy their first time home. What's the best solution for that? So lots of solutions out there. Never accept no. I think that's probably the motto of today, right, Duncan?
Yep, exactly.
Yeah. Well, much mahalo. Have a wonderful weekend, and we'll be in touch next week.
Okay, thanks,
Aloha.
Ron. Thanks, everybody.